these sessions. If you're not new, that's fine. If you are new, that's okay too. But we always go over the same strategy here, just looking at the market's real supply and demand, and to figure out where prices are going to turn and where prices are going to go. So let's start to do that. We start out with the dollar, and let's start out with this daily chart. Everything is pointing to, so for those that have been in our sessions for a while, we came up to the 103.40, and the plan there was to have a, sorry, I was just reading the chat. So prices came into supply at 103.40. We were expecting a pretty big decline in the dollar. We've got a decline, but I'm surprised it's held up as long as it has. The charts are telling us it's going to go quite a bit lower. So here's that level that we've had in here for, we've had this level in here for a couple of years. And we had some other levels sitting just above that. So there you go. Now when you go to the smaller time frames, again, everything is, everything is screaming lower dollar. Right, so we look at the smaller time frames, and especially we go much smaller. You can see even sitting above current price, we've got 2, 3 supply levels on top of each other. So I'd expect the dollar to see new lows, even this morning. Right, we're getting kind of close to that now anyway. But so everything is screaming lower dollar, which means we can buy pullbacks in gold, crude oil. I know there was some Brexit news overnight, so maybe we'll start with the pound. The pound has had quite a rally, but you'll see we'll come back to it. You're falling now, right? So I don't know that there's a ton to do in the pound. Let's take a look. By the way, I can look at any market you want me to look at. I have a whole list here that we usually go through. I could certainly look at any market you want me to look at. Yeah, there's no daily demand on the dollar. You find a little demand on much smaller time frames, but not much. Okay. Let's move on from the pound. So again, dollar looks weaker across the board. So we'd want to look to other currencies, commodity markets, and possibly buy pullbacks to demand zones in those markets. Here's a chart, a set of charts for the Aussie dollar. So again, we can see we're up in this daily supply zone for the second time, but slowly drifting through it. So given what the dollar has, right, we could possibly buy a pullback here in the Aussie dollar to the 75.70 area with a stop below the lower level, right? So that would be 75.55. So let's see, 70 on the entry, right around 55 on the stop. So that's like a 15 tick stop. And times, this is, we look at the future, so that's $10 a tick. So I think you get the point there, right? All right, we can put that level in. Let's do that. Anybody trade the Aussie dollar futures here? So let's get our... level in here. So there's our level, but it's also sitting on top of another level. So if you do jump into this one, you'd want to put your stop just below the level. We'll make this line a red line for the stop, so you can see how to set these up. So there's the bottom of that area, and then I'm just going to go 2 minimum price points below it. Okay, right there. All right. So 75.70 on the entry, 55 on the stop. I guess you can call it 56, but 55 safer. And then we'd move for a look back up to at least, at this point, at least 95. But I think we're looking for more than that. Now, you'd want to time your entry with the dollar coming into this supply zone above it at the 100.20. Okay. All right. Any questions on that one? If not, let's move on. And again, if you have markets you want to look at, just type them in the chat. Otherwise, I can just continue to go through my list. We'll look at oil. Sure, we can look at the Aussie dollar in just a minute. Oil is an interesting one here. Because again, the logic here is buy pullbacks to demand. If you look on the 60-minute chart here, oops, price came down to this right here. I'm sorry. Price came down to this nice demand zone. We've had a nice rally, but we don't have another demand zone sitting below current price on the larger time frames or smaller time frames. So, dollar continues to fall. Oil's going to go up. But there are some larger time frame supply zones up and to the left. Okay, not much higher than where we're at now. Okay, so you can see here about 58.30, and again, this is bigger picture stuff, so we won't spend too much time on this. When I go to the 4-hour, there's a level that comes in just before that, sitting right up here at 53.80. Okay, so keep an eye on that one. Watch the 53.80. You're not that far at the moment. You're 50 cents away from that. Okay. Yeah, let's move on to a very completely different market. Let's go to the euro, the spot euro. Just right here. All right. And if you have a specific question about this, let me know. Otherwise, I can just walk through it. So again, with the mindset of a what's likely to be a soon-to-be weaker dollar, we'd want to look for demand zones to buy pullbacks in the euro. And we just had that opportunity. I don't know if anybody took advantage of this. If you're following the supply-demand strategy, there was a perfect little entry right there. Below that, at least on this time frame, we don't really have much fresh demand. Well, I guess you do once we get down to here. And then down in here. Let me just put a couple levels in there. We don't need to put the full, well, yeah, we could do that. I'm going to put that level. So a couple of these that I'm showing you so far are these rally-based rally areas. Remember, the levels that are always going to be further out on the curve that are, a little higher probability are going to be those drop-based rally and rally-based drop type levels. Okay, so here's some demand down here. We'd want to be careful buying above that. There is a little level, I'll show you right up in here on the 5-minute. Yeah, this whole area in here, you're probably going to get another bounce out of it as you move back into this one. So we'd want to see prices come down to the 107.42 to 107.38 with a stop at probably 36. So 42 to 36 entry stop. If you're interested in that, adding a teeny bit extra on the stop just because we're looking at the spot euro. Okay. And there you go. Let me get this chart up. Oops, I think we lost a chart here. Where did that chart go? Huh. Oh, it's right here. It's, oh, there we go. Now that's weird. Never seen this before. Oh, that was interesting. Okay. Any other markets you want to look at? Again, otherwise I can certainly pull up mine. Gold, yeah, gold. Let's look at gold. So gold's coming down. So with this supply zone right here, we have a demand zone in gold right over here. And this level comes in just below where we're at right now, 1214 to 13. So the level's about a point wide. Again, if you trade gold, you're going to want to add about a point on for the stop. But remember, if you're new to gold, this is a big money market, so just make sure you know what you're getting into as far as risk and reward and all that, and margin. Again, I think gold's a great market, but you've got to be careful. Yeah, again, if you're gonna play this supply in the dollar, that means you're playing this demand in the euro. I'm sorry, in gold. So let's actually put them on the same time frame or something very close. Yeah. So there's that demand level. Again, right there around 14. Okay. Big picture with gold, we've got to be careful because we're right into some larger time frame supply. But again, you've got gold into supply in dollar with some supply above. You know what I mean? All right. Again, so if you trade gold, remember it's $100 a point. So 2 full points there is $200 of risk, and that's just for one contract. All right. And yeah, so there you go. Now, if we're able to get through that, gold can fall back down to, just last night it was down in the 1210 area, and of course it got down much lower than that. So what you're really playing for is this little level right here on the demand side, which lines up with this supply zone stuff just up here. 2 supply levels on top of each other for the dollar, actually 3. So that's why it looks just so bearish. Okay. All right. Let's keep going. We set a trade up in the Aussie dollar. Let's see if that entry here. No. So remember this one. We're looking to buy the Aussie dollar down here with a stop just below. Looks like a lot, but remember this Aussie dollar is just $10 a tick, and just a 15 tick stop there. But again, even that is playing this dollar supply. Right. Yep, we can go over to the yen. Not a problem. And that's the spot. Okay. So yeah, let's look at the yen here. A little bit tricky in that we do have some supply here. So if you, I wouldn't short it up here, but I wouldn't be surprised if prices fell from that. The dollar does have a little bit of room, not much, about 10 cents before it's going to hit supply up here. Yeah, I mean, short term, I'd probably leave the yen alone here, or I'd be a buyer much lower. And again, we're just basing it off that dollar information over to the left. You know, the yen looks, if you go to the daily though, if the yen, and we're not close to this now, let me actually pull this up on the 4 hour and see what we have here. Yeah, I wanted to point out a couple, once the dollar, the yen does come down, you do have multiple demand zones on top of each other. Okay. So that's where we'd be a buyer of yen and obviously a seller of the dollar. The dollar index chart is supporting this idea, so that looks like a good one. But we need the yen to come down a little bit. Okay. Let's go to the Canadian. So, what jumps out at you here on the 5-minute chart, the 10-minute chart, are these supply zones, above current price. But we need to be careful with that because, again, you're thinking, oh, let's just short the Canadian and prices will fall, dollar's going to cruise higher. And that's not what the chart is telling us. So if we go down and look to the left, you'll see what I'm talking about here. Let me just get this. Need some more data coming in. We're waiting for a little data here. Let's see. Not sure why this is taking so long. Let me see if I can do it here. This chart has data. Okay. There we go. Now let's go down to a 5-minute chart. So if the dollar's going to fall, we want to look for a spot to buy the Canadian on a pullback. We just don't have it here. Let me go down a little bit more and look left. Let's get a few more days in here. See if we can find something. Yeah, no, nothing here in the Canadian. All right, well, so the dollar is running into a little bit of supply right here. It's going to have more supply. I'm sorry, the Canadian. So the Canadian has a bunch of supply zones on top of each other, which again is bearish for the Canadian and bullish for the U.S. dollar. So be careful with that one. Okay. Yeah, I'm going to stay away from that one. Again, if the dollar didn't have these supply zones here, I'd say let's absolutely short this Canadian. Looks like an obvious, great trade, but the dollar does. Let's take well, the yen futures are going to look the same. Let's take a look at silver. So silver is going to be very similar to the gold chart. And again, you can see silver coming into a little bit of demand here. This trade's actually, I'd say, a few ticks lower, and that's an entry. Silver into demand with dollar coming into supply up here. You also have larger time frame demand. Sorry, that's not larger time frame demand. There we go. Silver looking higher on most of the time frames. And again, the dollar looking lower on most of the time frames. Okay. I don't know that we need to set up a trade there. I think this one's pretty clear. So we're looking at 17.18 with a stop right here, about 17.145. Okay, if you trade silver. Again, make sure you know the price points of these markets before you jump into them. Okay. Again, if you have a market you want to look at, let me know. Otherwise, I've got a whole other, we'll jump into another set of markets here. Here's copper. The reason to look at the copper chart, let's see here. I had it on my list. I don't see, let's see what we want to look at here. All right, never mind. Let's put this one on a really small time frame. Okay. Let's say I see your question there. If RBD and EBR are the highest probability, shouldn't we? Yeah, you stick to those, but when rally-based rally and drop-based drop, when they're fresh levels and they have big profit zones, I'll take those as well. I mean, they're fine. They're just typically going to have smaller profit zones because they're found in the middle of moves, right? So those will have opposing zones that are closer to current price typically. Let's keep going. Won't spend too much time here, but just to share with you, this is the 10-year note, and if we look at the, so this has had quite a move. So obviously the big question is, where does it go from here? Okay. So the 10-year is likely to see quite a bit of movement. There's room. There's 15 ticks of room to the downside here. That shouldn't be a problem. And again, you need to go above the highs here to get into the fresh supply zones up here. Those are golden areas up there, especially with the rally-based drop sitting on top. So if you're looking for a market that has quite a bit of room and you should get quite a bit of volatility, the 10-year is definitely one of those. Let's go back to, I have the pound on my list here. I know we looked at the pound for a minute, but let's go back there. Okay. Yeah, so dollar coming into some supply here. I know this isn't great supply, but if you look how it rallied, there's really nothing holding this up. You do have the pound into some demand, like literally right now. Fairly low risk, possibly entering the position in here with a stop just below this level. And then if the dollar turns and comes down to here, that'll be a nice profit, right? If you trade the spot pound. If I see your question up there, if they're fresh levels, I would go with the rally-based drop and drop-based rally. Okay. All right. And let me pull this down to 2 minutes just so you can see a little bit more. Right, so you can see we're down into this, and then you've got a little level here. So if you did attempt to take this, you need your stop just below this guy, and that's also betting on the dollar turning lower. And looking at the way the dollar rallied, it's likely to. It's got to get through all this with no demand below. Not likely. So you can see it's already starting to turn, which will bring the pound up. Okay. May get that on the pound. Let's see if the Aussie came down for us. I think it came all the way back, but let's see. No. All right, let's keep going. A lot of markets on the list. And hang on a second. We could take a quick peek at the equity index markets, but these have just been sitting in a range for days and days and days and days. So there's not a whole lot to do in here. Remember, if you're trading a market that's sitting in a trading range, that means you're at a price level where supply and demand is not that out of balance. Okay, if there was a big imbalance, you wouldn't be in a range. You know what I mean? Okay. Gold, yeah, let's go back to gold. Sure. I don't know if you're in that or not. Yeah, so gold is now down into this level. So remember, we're talking about buying it here with a stop below the area. And again, that's betting on that the dollar's going to hit this level in turn, which it's starting to do already. Okay, just like that. All right. Again, if you're in gold, just make sure you understand the risk. The dollar can certainly go a little bit higher into the level. I would almost expect it to, which would bring gold down a little bit more. That's why you need to have your stop in the appropriate place. But if you're in gold, you obviously, hopefully, you have your stop in and your target, and you're okay with either the loss or the profit, either one. Okay. Any questions on that one? So remember, the dollar is probably the most important chart you can look at. It'll guide your direction every day, long-term, short-term. I showed you the daily chart of the dollar earlier, and now we're making all these decisions off a 10-minute chart. So, that chart and a couple others, and focusing on supply and demand, you'll get multiple opportunities a day, and again, multiple quality opportunities every year. Great. Yeah, good to hear. Good to hear that. All right. So gold is turning, and again, you'd probably look at the 117 area for an aggressive initial target. Going beyond that, you could go up to that around that pivot high. Looking for a higher probability target, you'd stick with the 1217 for gold. But that would be about $300 in profit per contract. All right. I have to run to another event here. Usually we go a little bit longer, but I do have to run to another event there. I wanted to put my email. There's my email address, sseiden@tradingacademy.com. And hopefully that was helpful. If you have any questions on the strategy, or if you're struggling to achieve your trading or investing goals, just let me know. Be happy to try and help if I can. And great. Yeah, I think we found some good stuff. All right, have a great day, everybody.